Hey everyone, Justin with the Mortgage Channel. It's April 11th, 2022, and this is your weekly update. So, the talk of the town has always been the Federal Reserve, inflation, and interest rates. But what is inflation? Basically, inflation is people buying items, but there's not enough items to buy. So, the cost of those items goes up. The Federal Reserve wants to fight this, bring them down. And the way they do that is raising rates to make things more expensive in the hopes that people will slow down on their buying. They won't buy as much of that. So they're going to look at the numbers first before they make a decision. And some of those numbers are going to be things like housing inventory. So this year we have 8% more houses on the market than we did this time last year. That means there's 8% more houses this year than last year. Interest rates are an entire 1.5 higher this year than they were last year. And also, out of all the homes on the market last month, March 2022, 12% of them experienced price drops. So the Fed may construe this information as a positive, or they may say it's not enough and we need to raise rates. But the consensus is about a 0.5 point raise. But now that we got that out of the way, let's figure out what your weekly rate cast is.
Monday was relatively calm and rates stayed steady in anticipation of later news this week. Rates ended the day in the mid to high fours. Tuesday, rates started with some heavy pressure from the markets as home appreciation came in much higher than anticipated, driving the markets wild. Rates ended in the high fours. Wednesday, rates stayed conservative in anticipation of the Federal Reserve's announcement at 2 p.m. When the markets opened, they suggested a 50 basis point hike. This drove the market crazy again. Thursday, rates surprisingly took a slight adjustment downward, but ultimately remained steady, ending the day in the high fours. Friday, that weather pattern continued as the anticipation from the Russian conflict is going to take much longer than anticipated. Rates ended in the high fours.